Alright guys, welcome to the Great Trading Academy, and today we'll be looking at this beautiful piece. I'll be giving you guys a valid explanation on why I took this trade and how I took it, of course. So this trade is a let's see, 1:5.49 risk to reward ratio. A very good one, I must say. Alright, this is on cryptocurrency, BTC. Don't get me wrong, I'm not a fan of cryptocurrency. I don't trade cryptocurrency always. I mainly trade the derived synthetic markets, and I trade the forex market sometimes, but I majorly trade the derived synthetic markets. Let's just head down. I know most of you guys will be thinking, why is this guy using a mobile phone to do this video? I mean, I prefer a mobile phone because it's mobile. I prefer its mobility. At least I can do a video, I can trade whenever I like and wherever I like, instead of carrying a PC about on a big bag. So let's just quickly head down, and I'll give a valid explanation to why I took this trade. Before we kick off, there are things I want you guys to understand here. First of all, there are three concepts. Don't get me wrong, it's a smart money trading strategy. But in this smart money trading strategy, there are these three concepts I want you to understand: market structure, selecting a valid point of interest, and liquidity. These were the three concepts I use in taking this trade. Market structure, most importantly. The market structure is king. It's king. If there's nothing you should know at least market structure. I mean, I might decide to do a video on an advanced market structure. A video on it from beginner to advanced, depending on the review I get here, of course. So let's just quickly head on to the drawing. Sorry, let's quickly head on to the drawing. This was price going upward, breaking structures. This was the price broke structure, came down, did something like this, went up again, came down to our POI. Don't worry, I'll give an explanation to all of this. Went up again, met a supply level, came down here, came down, didn't change character, and then boom, it's heading to our target. Hopefully it breaks a bit and goes past our target. Yeah, so this was just price doing its thing. Yeah, this was price broke structure here, and just indicates that that's a break of structure. And alright, this was the POI. So it's our point of interest. So first of all, let's do a recap. First of all, what we checked for was the market structure, the current structure. What direction is the market trending? Upward, downward, sideways? It was trending in an upward direction. So that was the first thing we noticed, and after that we went ahead to find a POI, our POI, after the last swing low. Yeah, went to find our POI and found out that this was our POI. This. Alright, now I'll give you my reasons for using this as my POI. It's an imbalance. My major reason for entering this trade here, it's because of an imbalance. We'll also do a video on this, depending on the kind of energy I get from here, of course. Alright, that's it. At imbalance. That was my reason for using this as my point of interest. And what is the point of interest? I don't know if I've said it before, but the point of interest is where you look to take your trade from, or where you enter your trade from. So that's it, yeah. So I found, a lot of you guys might be asking what is an imbalance for those that are new to the smart money concept. Of course, I also asked that as a beginner. An imbalance is a space between two candles. Price is always bound to fill it up. It's always bound to fill it up. This is it. A space between this candle and this candle, and then there was a bearish candle before this imbalance, making it a valid point of interest. Yeah. So okay, that's it. And a lot of you might be asking, is there another way you picked your point of interest? Yes, I did what I call time frame correlation. That is combining both time frame. When you are trading, you need to consult other time frame to know what is actually going on in the market. Yeah. So okay, I went down to the 1 hour time frame. Of course, I compared it with the I compared it with what do they call it, with the 4 hour time frame. This is it. The last bearish candle before this little break of structure here. There was a candle, the last bearish candle. Price came to it, mitigated it, and boom, it's heading up upwards. So that was how I majorly picked my point of interest. Yeah, it was on the 1 hour time frame I picked it. I'm just showing the analysis on the 4 hour time frame, of course. If you notice, price did something like still on market structure. Price went up, did something like went up. It broke structure somewhere around. Yeah, if you check the 1 minute time frame, you see that price broke structure. I went up again, broke structure, and a lot of you guys are like asking, why didn't you take your trade from this this point of interest, this other block? I mean, it's a valid order block, of course. So why didn't you take your trade from there? Well, this there are things called the smart money trap. Their main aim is to trap traders. As they are retail traps, they are also smart money traps. So this is what they do. They try to trap you. Meanwhile, the main POI that we're looking at is this. There's also an imbalance before this one. So when you see this kind of thing, you need to know that it's a trap. Avoid it. It's a form of liquidity. Liquidity, yeah. So this is a liquidity. I also do a video on liquidity, of course, depending on already. So this is a liquidity just before our POI. This is what makes up a valid point of interest. I also do a video on that. There's a lot to learn from the Great Forex. The Great Trading Academy. I don't put Forex in my name because I trade everything tradable. Oil, synthetic indices, cryptocurrency, blah 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 blah. So that's it, I guess. That's it. So we're currently running profits. And if you notice here, price came after price did this. After price came down here, instead of going straight up to our what they call it, to our target, yeah, our take profit, instead it went here, hit a supply level, came down to another demand level here, and then boom, starts shooting up. Yeah, that's what happens. The fact that price is in an uptrend does not mean that it does not trend a bit lower. It does. It also respects this thing, some supply zone, but not as much as not too much as far as price is trending upwards. So this is it. Price respected it, came down to a demand zone here again. This would have been our second entry. You feel me? Yeah. So we would have had two entries here. This would have been our first entry. This okay. This would have been our first entry with our target at this high, the recent high. Always target the recent high. Don't be greedy. Don't go more than that. And this would have been our second entry. Yeah? You would have done it like this. Keep your stop loss far away from your other, from your what do you call it, for your point of interest. Don't be greedy. Don't be greedy, to avoid getting stopped out. Tight stop loss always come with disadvantages. This is it. Price came here, met met with our order block, liquidated, came back and liquidated whatever it wanted to, collected some liquidity, did whatever it wanted to do, and then boom, pushed up. So that's it. That was this. These were the three concepts we used in taking this trade. Market structure. We selected a valid POI, that is an imbalance, order block, whatever makes up a point of interest, and liquidity, which also, you know, which also supports the claim of a valid point of interest. So that's it. If you enjoy this video, or you feel like you like how I explain, I explain my things, you can like, subscribe, and turn on your notification, because there will be more. There are great things here to come. Yeah, our major aim is producing pros, in the trading industry, and liberating a lot of people, giving a lot of people financial freedom. Thank you for watching. Don't forget, like, subscribe, and turn on your notification.